Procter Gamble, the world's largest consumer products company, today reported a 15% jump in profits from a year ago. That did top analyst expectations. Shares, well, they reacted. They rose almost 2% in today's session, what was a very tough market environment. Joining us now with more on Procter Gamble's earnings and the company's outlook is the company's CFO. He's Jon Moeller. Jon, good to have you back on Street Smart. Good afternoon.
Good afternoon. Good to be here.
Great to have you here. Emerging markets and sales in those regions was a big reason why you guys did well this quarter. Are you worried, though, about the outlook? Because we certainly are.
Well, in general, I mean, consumers are under pressure, particularly in developed markets, but around the world to some degree as a result in developed markets of high unemployment levels, obviously falling asset values, whether it's real estate or equities. And rise in energy costs. But really, we see a number of points of light out there that keep us confident in our growth projections going forward. First, our markets are growing. They're not growing as fast as they were historically, but they continue to grow. Second, as you mentioned, the markets in developing markets, they grew 8% in our last quarter, and we grew sales 14% in developing markets. So that continues to be a strong point. And even in developed markets, we see a lot of demand for premium price innovation. We actually were short of supply. Demand exceeded supply on several of our key innovations over the last year. And last, consumers continue to be very interested in branded offerings. If I look at our market shares, for instance, in Western Europe, we're up 18 out of 19 consecutive periods. Private label's been flat or down for 13 consecutive periods. North America, very similar dynamic. We're up 13 out of 14 periods. Private labels flat to down in each of the last 11 periods. So it's tough, but there are really a lot of opportunities for growth.
Well, all right, so you're talking about these opportunities, Jon. I mean, your stock's down about 5% for the year. It's up about 4.5% if you look over the last 12 months. Do you think investors are seeing all of that potential in your stock? I mean, why aren't they rewarding you more handsomely?
Frankly, we've been investing pretty heavily to drive a strategy of expansion of our portfolio, both vertically, horizontally, and geographically. And the payoff for that investment is going to come as we go forward here, and I think they're waiting to see that.
Hey, one thing I like about talking to you guys in particular is because you do sell all around the world. You have so many products. You play into the consumer segment. We're really trying to get a grasp on what's going on in the global economy and in the U.S. economy in particular. From the trends that you're seeing, how would you describe, let's start with the U.S., how would you describe the U.S. economy? We have folks saying that we could be headed back toward a recession. Do you see that from what you're seeing in terms of your sales and your trends?
Well, obviously, we're not economists, but if we just look at our markets and our consumers and their purchase habits in our markets, they're not changed very significantly. We see in North America flat to about 1% market growth. The same thing in Western Europe. We do see some trade down to cheaper price brands, but again, as I talked about the private label trends earlier, they're not indicative of a major change. So we're not seeing big changes month to month, quarter to quarter.
Well, that's interesting. So then I'm assuming in terms of your jobs picture, obviously jobs is on our mind today with that jobs report. It did come in a little bit better than expected, but nobody's giving it a high grade at this point. What about your jobs picture? Do you guys see yourself hiring? Do you see yourself cutting back at all in this environment?
Well, we continue to hire. I spent two nights this week working with interns trying to convince them that this was a great place to work. So we're continuing to hire. We're doing it prudently, but I expect us to continue to hire. What's
the market that gets you guys most excited at this point? I know we all talk about those emerging markets, Jon. Is that still the emphasis for you guys?
Well, it's clearly a point of emphasis, but we really have opportunities all over the world. We just introduced, for example, Pro Health toothpaste into the UK, so Western Europe, in June, and we're already at roughly a 20% share after 4 weeks. So that's a significant opportunity. And there are, if you think about it, we market products in 38 product categories globally. In an average country, we're only in 19 categories. So we have a significant opportunity ahead of us just in terms of globalizing our portfolio.
Right.
And that's both developed markets and developing markets.
Jon, 20 seconds as you guys work on that portfolio. Any fine-tuning? Might you be getting rid of some brands, doing some acquisitions? Just quickly.
Well, we're continuously working on our portfolio. We've got both an acquisition and a divestiture that we've announced that are under work and should be closed by the end of the fiscal year. And obviously, beyond that, we try not to comment on future acquisitions or divestitures.
We got to run. Jon, thank you so much for your time. Jon Moeller, he's the CFO over at Procter Gamble.